Good afternoon, everybody. This is Josh Jones with CoVerica Insurance. I'm going to be presenting a first-time homebuyer's insurance. First-time homebuyer's guide to insurance. My goal here is to give you all the tools that you need to make a confident decision about your insurance, and also to help you as your agent understand my role as it plays into this process now and in the future. So, who am I? My name is Josh Jones. I'm with CoVerica Insurance. I'm a personal lines agent. I help people shop for home, auto, boat, RV, motorcycle, and umbrella insurance. We've got several different options with different companies across multiple states. I work directly with you and your mortgage lender as a courtesy to you instead of the hassle of shopping for your insurance by yourself. I do that for you, and I can advise you on the best coverages that makes the most sense for you and your family. I have a family as well. I have a wife and two beautiful little kids, and I have some stuff that I want to make sure that is insured properly as well. And I like cars, so we can talk about that at nauseum. Who is CoVerica? One of the largest independent insurance agencies in the area. Our vision is to make sure that we give you options, and we've got lots of them. We've got buying power with multiple different companies across the country. It gives us leverage to make sure that we can offer you everything that's out there. Our mission is to make sure that we treat you like we would our family, our neighbors, ourselves. Build trust one policy at a time, no surprises on the back end. One thing that we like to talk about a little bit is we've been awarded the Best Practices Agency Award 4 times in a row from the Independent Insurance Agents Brokers of America. And just to kind of toot our own horn a little bit, this Best Practices Award is only given to about 1 in 1,100 insurance agencies in the country. So why would you choose to work with an independent agent instead of working with one of the big captive agencies like a State Farm, Farmers, Allstate? We work for the client and not the insurance company. So my alliance is to my client and not to any one particular company. We offer names that you can trust: Travelers, Safeco, Hartford, MetLife, Nationwide, a whole bunch of others, some that you may or may not have heard of. Coverages can range. We've been conditioned to always look for what's the cheapest. Everybody wants to find the cheapest insurance policy, but what exactly is that going to do for you whenever you need to lean on that policy? Prices can range dramatically across the market when the coverage is equal, and prices change yearly. So prices and coverages change yearly. So it's to your advantage to make sure that we continue to shop for the best policy and coverages that make sense for your current situation, and your situation may change year over year. What is hazard homeowners insurance, and do I need it? Number one, if you have a loan, it is required. It's the collateral for the loan and protects the lender against its investment and your own. It's one of the biggest differences between renters and homeowners insurance is that now you're responsible. Everything that happens in and outside of that home it's on you. Hazard insurance, it protects you financially against damages like fire, wind, lightning, etc. And it's part of your homeowner's policy package. And that package may include some other things as well. And we're going to talk about that on the next slide. Homeowners insurance also includes liability insurance, which we'll talk more about, which pays, for example, property and medical, legal costs if others try to sue you, for example. Yes, you do need it. So on our next slide, we're going to talk just a little bit about the basic coverages of a homeowner's policy. Let's get right into it. The dwelling. Dwelling is the structure. That's not necessarily the land that it's built on. That's the actual house itself, and this is the insured amount for replacing that portion of the home itself. Other structures, this is sometimes referred to as coverage B if you look at your coverage or your policy. This is usually about 10% of coverage A that covers everything outside of the house. So, for example, a deck or a pergola, a shed, fencing, all those things that are not attached to the home. Personal property, this is all your stuff. I like to use the example of if you were to take your house, pick it up, hold it upside down with the roof off, everything that falls out, that's all your stuff. That's your personal property, inside and outside. If you have any higher value items, such as collections, coins, art, jewelry especially, consult your agent about those things and we can get those scheduled. That's a little bit different, and I'd like to discuss those specifically if you have any questions. Loss of use. This covers living expenses when you can't occupy the house due to a covered claim. For example, a guy in my office, a friend of mine, he was on vacation. $3 or $4 part in the back of his toilet broke while he was out of town. Came back and water was rushing from the upstairs toilet under his front door. It's about an $85,000 loss from a pipe break while he was on vacation, and they incurred about $15,000 in living expenses. Food, dining, lodging, boarding for pets, and that sort of thing. This is how the loss of use comes into play. Personal liability pays for losses and damages to others. The most common one that we see on that one is dog bites. Moving on to the next thing, medical payments to others. This pays for immediate medical assistance to non-household members if they're injured, regardless of fault. The next slide is going to cover endorsements or add-ons, and these are things that I like to always make sure that we add on to every policy because I believe that they are very, very valuable. Some of these options, these optional coverages, people have been told that they don't have coverage on it, and some of these endorsements are less than $20 a year. So I always try to make sure that people understand the value of them, and we're going to talk a little bit about what those are. So not every policy is the same. Some of these endorsements are not even the same. So the following are additional coverages that I will always discuss and recommend to adding to your policy. The first one is water backup. This will protect you against water from sewage backup into the home, water backing up from a toilet, a bathtub, a shower. Things that little toddlers can put in a toilet can back up quite a bit and flood out a bathroom pretty quickly. So that's definitely a coverage that you want to have. Now, the next one, this is foundation water damage. This is remediation for pipe leakage or break under the foundation. Another way that you can kind of talk about this is, in layman's terms, a slab leak. If there is a broken pipe under a concrete slab, this will help remediate that problem, reinstall flooring, and then fix that pipe back up, put the slab back together, reinstall flooring, etc. Replacement cost coverage for your roof and contents. This is a big one, and a lot of companies are changing in Texas just due to all of the hail claims and wind claims that we have in North Texas. It's not necessarily a matter of if, but when your roof is going to have to get replaced in Texas. So the difference between replacement coverage and actual cash value, we're going to get into a little bit more, but basically this is, and rather than doing a depreciated value on your roof or your contents, your stuff, this is going to give you full value without any hassle. Scheduled personal property. This is an agreed replacement value on expensive items. This is those items, like we had talked about, jewelry, collections. These are not subject to your homeowner's deductible when you schedule those items. All right, so getting right into it, that replacement versus actual cash value. This is what hail damage looks like. These are little pock marks on the asphalt shingles. I'll give you a real quick example with regard to replacement. So a $20,000 roof with replacement cost, you're going to pay typically a 1% deductible on the dwelling amount. So 1% of the insured amount for the dwelling to replace your roof. Pretty similar to, if you were to have an actual cash value on your roof, it's kind of like how your auto policy works. You may have a 10-year-old roof. Insurance company is going to say, maybe we'll pay you 30% of the value of that roof. And that could mean that you end up having to fit the bill for a difference of $10,000, maybe $20,000, $30,000 after that roof is aged a little bit. That's why you want replacement cost. There's no depreciated value over time. You pay your deductible, you get a new roof. , Actual cash value, like we just said, depreciates the value over time. This is the most important thing that I can always stress on a policy as it relates to your roof and personal property. A depreciated roof, for example, can reduce the amount that an insurance company would pay for a new roof by several $1,000s. Side note: normal wear and tear is not covered. Air conditioning units, heaters, appliances, foundation cracks due to settling, shifting hot water heater happened to me. That's the kind of thing that happens to be covered under a home warranty, just not under your home insurance policy. Those things they're going to wear out. They're not covered. The next one we're going to get into is dwelling value versus the price of home. I get this question or comment quite a bit. So my house cost X amount of dollars, but my dwelling amount is higher or lower than what I paid for the house. There's a couple reasons for that. You may have paid, number one, you might have gotten a great deal on your house. Maybe you are just a good, you found a great value, or you've got an awesome realtor. That house may be significantly lower than what the insurance company knows that it's going to cost to replace that house at today's reconstruction values. Another thing that we look at a lot, we see in certain areas, especially the park cities, University Park, Forest Hills, Lakewood, that lot value is high. You may have a home on it that's the size of a postage stamp, but that value of the lot is, $500,000. The lot may be a very, very significant portion of that sale price, but the insurance company, all they really want to care about is how much is it going to cost to replace the house. The land does not have to be replaced. It will cost a builder more to build one house than several at a time. So think about a residential neighborhood, a development where all the houses kind of look the same. Well, all that labor and material cost is it's factored in because there's so much supply going on at that time that it really drives the cost down. Well, to do a one-off is going to cost a lot more. We're also talking about things like debris removal and bringing things up to code, especially on older homes. This is going to change the dwelling value versus the price of the home. Speaking a little bit more about how insurance is priced, another question that I get quite a bit is, so my friend Susie paid, X amount of dollars for her home. We have a very similar home in terms of square footage, the year that it's built, etc. Why is Sally's insurance policy so much cheaper than mine? Well, there could be several reasons for that, but insurance premiums are based off of a lot of factors, including your credit score. Your credit matters. Similar to your lending situation, the better your credit, it really leverages a lot of power for you. It also pertains to your insurance tiering as well. The age of your home. Older houses, they break more. They tend to cost a little bit more to insure. Also, in Texas, the age of your roof matters. The older that roof, the more likely it is going to need to be replaced. Previous insurance history is another big one. If you got a bad record, it sticks with you. There's some contingencies to that, but more often than not, whenever you have non-weather related insurance claims, those are going to stick with you, and they're also going to factor into your insurance pricing. Scheduled items like jewelry, firearms, high-value electronics, those are going to be things that are also rated. Safety devices installed. If you have gated security, if you've got a gated neighborhood, monitored, hardwired security alarms, fire suppression systems, water shutoff valves, those are all things that are going to increase. Actually, they're going to deduct from your insurance premiums by giving you a little bit of a discount. Multiple lines of business. This is a big one. I always try to encourage people to consolidate their policies, their home and auto, with the same carrier, and there's a lot of reasons for that. Number one is it's going to save you some money, and there's also some added advantages into just the way that the carrier is going to take care of you in the event of paying a claim. But moreover, it's just going to save you money. It's a smart thing to do. Put your home and auto with the same company. these are some commonly unaccepted things. I put this goofy guy over here that's jumping off the trampoline into the pool. Pools, trampolines, they're a big red flag for insurance companies. Pools with slides, diving boards. Some companies are going to look at that and turn their nose up at it. Bully breed dogs. This guy over here, as cute as he can be, but some people are looking at that and thinking it's not something that they want. Trampolines again, ATVs, a lot of times fire pits. That pretty much wraps this up. If you guys have any questions, I would love to help you out. I hope you found that this is useful. I'd like for you to have an opportunity to have me quote your business for your home, your autos. Give me a ring at the information I'm about to provide for you here. Again, I'm Josh Jones with CoVerica Insurance. And I hope that you enjoyed the show. And if you have any questions, let's talk.